Welcome to the Better Business, Better Life podcast. Terry DuPont is the founder of DuPont Advisory Group, a group dedicated to providing comprehensive services to successful business owners, medical, and other professionals. Terry has top-of-the-table status in the prestigious International $1 Million Roundtable, placing him among the top 0.1% of all professional financial advisors in the world. Terry's philosophy is, I've learned that I grow and prosper more by focusing on the success of others, rather than fretting over my own. Terry is a certified financial professional with the Institute of Financial Wellness, an advisor for the Power of Zero Taxes in Retirement, chartered retirement plans specialist, certified wealth preservation planner, and certified philanthropic developer. On the podcast, Terry brings together experts in their field who have succeeded in building their business to share their secrets with you. And now, here's your host, Terry DuPont.
Welcome, everyone, to this week's episode of Better Business, Better Life, Building on Your Success. And I'm your host, Terry DuPont. This week, we have Kim Ledger with us. And Kim is Vice President of Complex Assets for Wren Inc. in Indianapolis, which is North America's largest independent philanthropic solutions provider. In Kim's role, she advises donors on charitable opportunities presented by non-cash assets, such as business interest, IPO stock, private equity, hedge funds, real estate, and business assets as well, or business interests. So, and artwork. So, since she launched the firm's complex asset practice, Kim has worked with donors seeking to donate more or seeking to distribute more than $1 billion in assets. Congratulations.
Yeah, thank you. It's actually closer to 2 now.
Yeah,
or
awesome.
It's actually more than 2, I should say. Yeah.
Okay. And leveraging relationships with the nation's leading financial institutions, family offices, elite nonprofit organizations, and community foundations to ensure that donors make informed and strategic gifts that deliver the greatest possible value for the charities, for the donors themselves, and their families. Before joining Wren in 2016, Kim spent 2 decades providing wealth management services to customers of Indiana banks. So, Kim, welcome to the show.
Thank you. It's a pleasure to be here.
Oh, we appreciate having you on. So,
pleasure.
Kim, I've got a lot of background and experience in philanthropic endeavors, but I don't think our guests probably do.
Sure.
So how did you get started working in complex assets?
Well, probably a lot like what you did in your business, working in the private banking services, became familiar with the philanthropic aspect of it. But in my last 2 years, every new account that I brought in was a business owner that was selling their business. So going through that exit, Terry, do you remember that book in 2007, the $1 trillion opportunity? It was a big book at the time. I did a lot of reading and looking at how I could help business owners as they were exiting. So, I don't know, I was just at a point in my career where I wanted something different, learned about Wren and said, that's what I want to do. And so when I started here, it was in a little different role, but building on my experiences as a wealth advisor and clients leaving their businesses. And I was getting calls from advisors who were asking about advisors, hey, I have clients who are selling their businesses, and can they give this to a donor advice fund before they sell? And so I was getting more of those. So I raised my hand and I said, hey, I think we need to start a division that's really dedicated to this and focuses on it. So the year before we started that division, we only did 4 complex assets. So a complex asset is really any non-marketable security that you would give to charity. So that's how I got started. And I had a lot to learn. I had a great base, but I had a lot to learn, and I had some great people along the way that helped.
I found in my experience that a lot of charities don't want to
Right.
take or receive certain assets because of the complexity of them and how to
Yep.
manage them and how to sell them, et cetera, especially real estate. And
Exactly.
what
Yeah.
would you say is the biggest challenge you faced working with complex assets at Ren?
Yeah, it was, I would say probably, well, every single one is different. And that's, to me, that is both the beauty of complex assets, and it can be the biggest challenge. Personally, I like that every day it's something different. Every family is different, every business owner is different, every organization is different, and I like that. Um, but I would say too, as we've grown tremendously, is being able to scale something like that and be able to serve as many clients as we do and advisors that we do on an annual basis is requires just a great amount of teamwork and communication internally, and making that a smooth process, because most many it's getting less so now, but especially as we first started, a lot of the advisors, it was their first time to ever do that, to ever go through that process. So I saw myself really, ushering people through that and making it as simple as you possibly can for a complex asset,
Right.
but having the experience and the confidence to go through it. Look, I've seen this, something similar, and I know how to get through that, has been helpful. So, like I said, the the biggest challenge is also its greatest blessing, is that
Yeah.
everything is different.
So how do you think you became, an expert at what you do in this business?
Yeah, I have this wonderful mentor at work, Greg Baker, and Greg has been in this specific industry since I think he graduated from law school. He is our EVP of legal and compliance on
Mhm.
the Ren side, and then on our charity side, he's the president. And so he's a tax attorney um, by education. And so I had the privilege of, had continued to have the privilege of working with Greg Baker. So as we were designing, our processes and procedures, and I was learning more about it. That's a nice thing about when you start something at the ground floor, you're growing with it and you
Mhm.
continue to grow. Where if somebody was coming in now, they'd have to have a much higher skill set than I probably started with. But I had Greg Baker there to teach me. And you know what? We have weekly, every, the more you do one, you learn something every single time.
Right.
Continued to learn. I had something new hit my desk today that I'd never considered before. So that's something I'll, in a short amount of time, I'll become very well versed in. But then we also have meetings every Tuesday mornings where it's almost like a, I don't know want to call it a book club, but it's like a study group where we get together and and we all present on information, not because our necessarily the people in our group need to hear it, but if you present that information, you've had to learn it, right?
Yes.
Like when you're learning something new, and if to the best way to learn it is to present it. So that's
I
been
agree
Greg's
100%.
philosophy.
Yeah. Yeah. I've
Yeah,
seen that. Yeah.
yeah, it's fantastic.
Why would you say what you do is important?
Oh, because those dollars, by the time we're done, this has been, I've had many, many rewarding years in the industry. Love it. And this has just been like the capstone of my career, because I get to see people take these non-cash assets and really fuel their passion for particular causes. I've got one that is just a fantastic story, and I'm going to use her name because it was in newspapers. So Mitzi Perdue was the wife of Frank Perdue, the chicken magnate Frank
Mhm.
Perdue.
Mhm.
So back, I want to say in the 80s, he funded like when you invested in the group that went out and brought up sunken treasure, the Atocha, and it was off the coast of Florida. They brought up the Spanish galleon, the Atocha, and there was all this treasure in it. Most of it he gave away, but he kept this emerald ring, and he had an engagement ring made for Mitzi Purdue in the 80s. And so she had that ring for years, and every time that she looked down at that ring, that's what she would see. When Frank died a number of years ago, but when she saw the need in the Ukraine, she was really moved by that. She spent time over there and she looked at what can I do to help. And so she donated that ring to her donor advised fund. We sold that through Sotheby's for $1.2 million. And she has made such a significant difference in the Ukraine. She's actually pretty famous for the work that she's been doing in a variety of ways. So I've seen clients who have were putting their life on the line, getting relief to refugees. And when he went to sell his business, then he made sure that he made a gift to his donor advised fund prior, so he could continue to support the charities that were making those efforts happen. And then there was this grandpa that I worked with, Terry, who was an advisor. And he said, oh, I love these donor advised funds. He said, Kim, I set one up myself. And he said, I had told my grandkids one year, hey, you're each gonna do a presentation on your favorite charity. You're gonna bring it, we're gonna present it, everybody's gonna present on it, and then I'm gonna vote. We're gonna all vote, and then I'll make a gift to that charity. And he said it was so powerful as he went around. He said kids from the age of like 7 to 17, they had the best time. And he said, you know what, Kim, I learned a lot about my grandkids that day. Mm-hmm. And now, of course, what do you think happened, Terry? He said, we're going to give to them all. Oh, okay. So every charity got it. But he was so moved by that it was just a really cool story. So I love telling that. So that's why it's important.
Both good stories, yes.
Yeah.
Having spent 2 decades providing wealth management services to customers of Indiana banks before joining Wren, how has your previous experience contributed to your current role?
Yeah, it's gave me a great foundation understanding, what families, wealthy families are looking at from what their own assets are, and why the philanthropic piece how that plays into it, and understanding how it all works together. And because a lot of times for a lot of people, they're going to give to charity. So let's look for the most cost-effective, tax-efficient way to make that happen.
Okay.
Yeah.
How do you and your team stay updated on the latest trends and developments in the world of complex assets? And how does Wren adapt to its strategies to stay ahead of this in this dynamic field?
Mm-hmm. There are a lot of organizations that I know I follow. For me specifically, because the majority of the clients that are making gifts of complex assets, I find a lot of them are going through exits. And so following the M&A market is really important. And keeping up to date of, like last year we saw, as well, I guess it would be 2022 now, after the first quarter, we saw a significant decrease in the M&A activity. So, looking at that, and we saw where it was going. So we began to really focus more on alternative investments. So getting our team in a position to where we could do that quickly. I say quickly, have a nice process for accepting and investing in alternatives. And that was a real game changer for us in 2023 and the end of 2022.
You were able to expedite things or streamline.
Yes. We weren't afraid of them. The team, you've probably are familiar with those subscription agreements that are 100 pages or so, give or take. And so getting the team comfortable with being able to complete those and answer those questions, and making it simple for our donors and advisors to go through that. Because those, especially if we're working with a hedge fund manager, it can be a really complex process because there's a lot to go through. But then also, keeping up to date with all of the tax rules, some of the proposed legislation now. We've been preparing comments with the IRS regulations, et cetera. But yeah, so it's a constant job to keep up with everything.
Yeah, you made a comment I want to ask about, and
Mm-hmm.
and philanthropy is a great way for people to benefit charities and themselves and their families while they're alive.
Yes.
But it is also, as I have found over the decades, an incredibly awesome estate planning tool. Okay.
Yes.
And so lately we've been having some conversations about, with some of our clients about what's going to happen to the lifetime estate exemption.
Yeah.
And this year it went to 13 plus million per person. And with the dire need that our country has for tax revenue, and the fact that we're putting stuff on the credit card like drunk sailors, our country is.
Mm-hmm.
What is your opinion what will happen with the lifetime exemption for estate taxes?
Gosh, that's a great question, because that's what, 2025, the end of next year, so we've got a couple of years. And it's a conversation we've been having internally, is what can we do to help? And I think we're going to see like a lot more prom notes. That's
Yeah.
as a way to get things out. But you know, I've been in the business a long time, and it's sometimes you see it go up, sometimes you see it go down. I don't know what to think about this one.
Yeah,
Um,
I when I started in this business in my business in 1979, the lifetime exemption per person was $600,000,
yes, same here. I was going to say
and it's
so it was
yeah,
1987 for me when
yeah,
I got started. But yeah, it was $600,000. So to think that that's almost a rounding error now, because it's combined 27.2, I believe. So yeah, it's significant. That's a good question. It'll be interesting to see it's an election year this year, so I don't think anything will happen now, but it'll be interesting to see what happens next year.
Kim, what advice would you give to individuals or businesses considering donating non-cash assets for charitable purposes, based on your extensive experience in this space or domain?
Hmm. I would say, as early in the process, if you're considering selling your business, begin having those conversations. I can't tell you how many times we get calls, and it's like, we're closing in 2 weeks. And it's the IRS has some real clear guidelines. Well, I shouldn't say it's clear. It is anything but clear.
They're clear
I
as
don't know
mud.
what I was saying. This assignment of income doctrine says, hey, if this gift is all but certain to occur, then it's an assignment of income. So you want to make sure that there's still some risk and some points of negotiation. So the earlier you can get it done, the better. You can at least get through the approval process, because there is, I think what people don't always understand is that when you're making a gift to a donor advised fund of a private company, is that the donor advised fund is coming in as a shareholder.
Mm-hmm.
So they have a due diligence process and a fiduciary responsibility to check out the company.
Mm-hmm.
So you're going to have to provide some of those due diligence documents. So just planning for all of that,
Yeah.
and whether you actually make the gift or not, if there are lots of reasons that it doesn't always work, it doesn't work out. So lots of things. But making sure you get through that due diligence process, having it approved so it's ready when you are, it is just, I think it would be really helpful.
I couldn't agree more. And I tell clients and prospective clients, say, look, if you're looking to reduce taxes on anything, whether it's the sale of a business or real estate, that
Hmm.
or anything that has a capital gain, for instance, and there's a lot of strategies. There's
Yeah.
philanthropic strategies and there's non-philanthropic strategies.
Right.
And I tell them, I say, look, when somebody signs on the dotted line, most of those strategies are irrelevant now, you know.
Yeah.
Uh, and so you need to do some planning for taxes
Yes.
long before you have a buyer or
Yes.
too deep in it. So uh,
Yeah. Especially if you want to do some estate planning and the charitable planning, those are often things you want to do in 2 different years.
yeah, yeah. So what is something you know now that you wish you knew when you started?
Oh, when I started in complex assets,
Yeah,
um,
or
gosh,
anything about the philanthropic arena.
that I wish I had known. Oh gosh, that I wish I had known. I would say, um, I wish I'd known how exciting it is.
Ah, there you go.
I probably would have started a lot sooner, but
Yeah.
it's an adrenaline rush, when there's, you're getting to closing and documents have to be signed and reviewed and there's some negotiating that's going on usually it's on language and documents, not on anything it's just it can be a lot. It's a lot of fun.
Yeah.
I'm
Okay.
having the best time. It's the most perfect capstone to my career I could have ever imagined.
It's not work if you love it, right?
I know. Well, there are days it feels like work. Ask
Yeah,
me
it
in
gets bored.
December. December, oh my gosh, it does feel like work, but it's so exciting. It
Mhm.
really is.
Yeah. That's when a lot happens, right? Towards
Yeah, I would at least 60% of the gifts are completed in the month of December.
Kim, how do you define success?
I would say that is from the stories I told you, when you know that there's an impact and you hear back about that impact, that you get to be a small part of some of those things. I That's absolutely success. Um, and another form of success is when an advisor calls back and says, "Hey, we're going to do this again with a different client." Then I find that um,
Awesome.
they become uh, good friends because you've done some business together, and helping advisors to really differentiate themselves in the market. I love that. I
Yeah.
love repeat business.
Yeah. Yeah. Um, looking ahead, Kim, what do you see as the future trends or emerging opportunities possibly in the field of philanthropy, particularly concerning non-cash assets?
I think we're going to see, as the wealth has increased, the there are more um, ultra high net worth clients today than ever before,
Mhm.
and so I think we're going to see um, the growth of the family office, whether it's through the multifamily office or the single family office. I think we're going to see significant growth there, which will just naturally lend itself to a lot more non-cash assets.
Yeah.
They don't invest the same as average people like me. They invest in private investments and alternative investments, and so and I think we'll see more prom notes, and we'll see tax credits and other kinds of interesting things that you don't um, that maybe haven't been as prevalent in the past.
All right. Okay. Interesting. Um, is there anything that you wish to share, Kim, that we haven't talked about yet?
Um, I mean, donor advice funds are continue to grow. Let's hope that the IRS doesn't mess that up with the regulations. Can't count on that, but there's a lot of people. It makes such a difference. I guess that's what I would say, is that um, it's a it's just a great way. Oh, and the other thing is, with the family offices, especially, um, that I think I've changed my mind on a lot since I began in the donor advice fund world, is a lot of time, there was a time when I guess we were looking at this at like DAFs versus foundations, private family foundations. And what I've learned is that there's really a place for that family foundation, and that there's a place for both
Yes.
the family foundation and the donor advice fund. And there are reasons to have both,
Yes.
for depending on the size of the family, in the size of the gifts, and what the purpose of that family foundation is. So I think that was a surprise to me, and something that I've learned as well.
Okay. Okay. Um, with the success that you've had at Wren, what do you see as your biggest challenge now?
Scaling, continue to keep up with demand, and find another me. I need another me.
Okay. Well, maybe you can clone one. Yeah.
Yeah, that would be fantastic. I don't know that everybody else would think that was so fantastic.
Yeah, I agree. No, everybody that knows me though, we don't need another Terry.
I can be a little intense, I know, but
Yeah.
it helps. But yeah, I would say scaling is just keeping up with the
Yeah,
demand.
that's a good answer. Don't think I've
Yeah,
had that one before. So, um,
yeah.
Kim, your contact information and everything like that is at the bottom of the screen
Oh,
and
good.
in the material that's included with the with this podcast. But is there a particular way that you would suggest that our audience contact you if they want to learn more?
I would say email is probably the best way, and then we can get, if we want to talk, we can always schedule a time. I just find that to be the most efficient use of time,
Okay.
is scheduling calls.
Okay. Well, great, Kim. It's been wonderful visiting with you.
Thanks, you too.
This will be a great episode. I know.
Oh, good.
So, everybody out there that's watching this episode, thanks for stopping in today and listening to Kim. And again, this is Better Business, a Better Life, building on your success. I'm your host, Terry DuPont. And remember, the best way to predict the future is to create it. And it wasn't raining when Noah built the ark. Come back next week. See you then. Take care.
This has been the Better Business, Better Life, Building on Your Success podcast. If you have questions about creating tax-free wealth and income, forward-looking tax mitigation, strategic risk mitigation, wealth preservation and legacy planning, and advanced financial management, go to DuPontAdvisory.com or email terry@DuPontAdvisory.com.
49 faces looked to him in triumph. Over the last 12 months, they had each taken turns and promoted his business for a week at a time, driving over $987,342 in revenue. What if you had a network of 50 centers of influence who promoted your business every week for a year? Grab your copy of the #1 Amazon best-selling book, The Ultimate Guide to Growing Your Business with a Podcast, at 33% off the Amazon price by going to ultimatepodcastbook.com. Again, that website for 33% off the Amazon price is ultimatepodcastbook.com.